welcome. It's Mary Ellen McGonagle, and you're watching the MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. And of course, from there, we always like to drill down and take a look at individual stocks within those highly active areas of the broader markets. And let's go ahead and get started. We've had a very active period, certainly last week in the markets, a lot of destruction, if you will, within some of the indexes and sectors. So what we're going to do, of course, as usual, is take a look at the current market, review some of the broader industries, get a better sense of where we are currently given the market's decline over the last 8 trading days. And then also, we're going to take a look at some examples. I'm sure many of you have stocks that have come under distribution, and you're wondering how you should behave, if you will, given that that stock may have gotten hit. So we're going to take a look at a couple of examples to help you put a plan in place if you have not already taken action. And then from there, I do have today a special guest with us who is going to review how you can use options in this volatile period of the markets. And her name is Sarah Potter. Her firm is shecantrade.com, and we'll get into that more as she presents her ideas for how you can use options in this volatile market. And also we'll take a look at some short-term plays for those of you that are more day traders and shorter term in your trading. You'll want to see this as it's paying attention to the current volatility in the markets and what you can look for to make those 1 or 2 day trades within your portfolio. And then lastly, how to prepare a watch list so that when the broader markets do come back into favor, you have a list of stocks that you can take advantage of and put to work in that new uptrend in the markets. So let's go ahead and get started. What we're looking at here is a daily chart of the S&P 500. This is as of the close last Friday. We can see the markets here did come under quite a bit of distribution. This is the action on Wednesday and Thursday. Those two were the heaviest, not only in volume, but as far as sheer decline within the broader markets. But before we get into that, let's take a look at some of these simple moving averages that I've overlaid on top of this daily price chart. The first is this green line. This is a 21-day simple moving average. And then the red line is your 50-day simple moving average. So when we are looking at these moving averages and using them to determine the market's health, your first sign of potential distress is a break below that 21-day simple moving average. Now, we've seen that occur before. The markets have certainly been able to recover, so it's not the end of the world, so to speak. But once we have a break below this longer term 50-day simple moving average, then things are certainly a little more distressed. And we can go back here historically. There have been other periods where the S&P has bounced around below this 50-day simple moving average. But as a rule of thumb, a sheer break below, certainly with this kind of volume, is indicating a shift in sentiment. And of course, from there, we did go on to break even that longer term 200-day simple moving average again on big volume. Even if we go back to this January-February sell-off, we only had a very brief undercutting of that 200-day simple moving average. So last week's break below it was concerning, to say the least. The good news is on Friday, we did have a move back above, at the very least, that 200-day simple moving average. And while that is compelling, the volume is showing institutions are buying on the dip. It by no means is telling you that we are out of the woods, so to speak. Again, not by any means. What we want to see is, going back historically, dynamics similar to the after this June-July sell-off in the markets. This stochastic that I'm showing you here on the bottom quartile is an indicator that is a momentum indicator. I find it very useful in helping define uptrend or downtrend reversals. So we want to key in on when the stochastics upon entering below this 20 indicates a market or a stock that is oversold. And that's with an anticipation at some point that it will turn. And again, ideally, as this stochastic turns up, as it crosses above this dashed neutral 50, that's where we are entering positive territory. And you do want to marry that with the indications of the broader markets. In this case, we can see that the S&P 500 in conjunction with this positive stochastic crossover has broken back above, in this case, the 21-day simple moving average. And we can see that it lines up perfectly. We can see this nominal downtrend here is reversed and the markets enter into a new uptrend. Now let's take a look at where we are now. We can see the stochastics are down below that 20 in an oversold position. And we can also see that there's quite a bit of work before we, at the very least, emerge out of that oversold and ideally break back above this net 50 neutral and combine that with the indexes breaking back above, at the very least, this 50-day simple moving average. So net, there is a bit of work, certainly, that needs to be done before the broader S&P 500 turns bullish again. Now, let's take a look at the Nasdaq, and I wanted to point out some dynamics here as well. We're also going to be using this momentum stochastics. Take a look at this break below the 50-day simple moving average. This occurred the week before last week, so we did get a little bit of a break here before last week's action. Then we did in fact see another break here below this longer term 200-day simple moving average. Again, this is a really significant area of support that has been broken. Take a look at this big volume. Institutions are selling their positions. Again, we did get a relief rally on Friday, and the Nasdaq in this case moved right up to that 200-day simple moving average. But the stochastics are in an equally oversold position where they need to recover from at some point in time before we can call this downtrend in the Nasdaq composite as having been reversed. Now, I've also overlaid the RSI to show you. This is called a relative strength indicator. And we can see the RSI as it goes down below this 20 line. That is also an indication that, in this case, the index is oversold. Again, that is with an eye toward an eventual reversal, and we do want that to cross up in this case as well, that net neutral 50. We want it to cross up back above that. So from here, let's go ahead and go over to stockcharts.com. And it is what's called a candle glance view. You can access this from the initial interface page on Stock Charts. And what I've done here is, in addition to having the broader industries represented, these are 2-month daily price charts. And so we have the Nasdaq here. We also have the Dow Jones Industrial, but I've also overlaid or input various sectors that make up a big part of the broader market. So we have the healthcare sector, XLV. You can see that they're interspersed, but I'll tell you the way that they're sorted is by what I've done is overlaid an indicator, the RSI, relative strength indicator. So then you can sort that in descending. So it's showing you the strongest, if you will, area first. So we can see immediately that the volatility index, better known as the VIX, really spiked last week. And this was in line with the distribution that we saw in the broader markets. So that's listed here initially, a big spike in volatility. And then we also did see a spike in gold stocks. And this could very well be, of course, a flight to safety. So we did see this gap up here in gold stocks. And then from there, we venture into some of the ETFs. And the first one we're showing here is healthcare. The healthcare sector had been leading the broader markets prior to what initially appeared to be a pullback, but more recently is a more serious sell-off. Technology, another leading index going into this current period of distribution in the markets. And then take a look at consumer discretionary. Now that index also was leading. It hit a new high at the end of September, but this consumer discretionary, XLY is the ticker symbol, is going to be comprised of retail and, of course, consumer-driven stocks. And this was an area of the market that did get hit first. This was one of the initial areas that saw selling within some of the major components. And then from there, healthcare and technology held in, but of course have more recently succumbed to the pressures in the broader markets. And then from there, we can see that industrials, now interestingly, industrial stocks were poised to hit a new high last week. We saw money flows into defensive aerospace and defense stocks, as well as some larger construction stocks, but that all fell apart last week. And this is a big drop. The industrials were down over 6.5%. Part of the drop there was transportation stocks. So as the price of oil has gone up, we've seen airline and trucking stocks and so forth get hit, but we can see too that it is in the weaker quartile within the broader markets simply because the industrials had not been leading in the way that healthcare as well as consumer discretionary and tech had been. And one thing I did want to point out to you here is the RSI is displayed in the lower quartile of these charts. And I want to point out to you, you can see as it dips below this 30, that is viewed as oversold. This will make more sense as to why I'm pointing that out to you as we move forward. So overall, we can see that there is not really an area of the market that has been untouched or unscathed as far as that flight to safety. Gold is that one area that is resisting the downtrend in the broader markets and seeing a little bit in the way of buying. So let's go ahead back. I mentioned that we would be looking at stocks that in the event your stock gets hit, what you may want to do or behave. And so what I'm pointing out to you here is a daily chart of a stock called Echo Global Logistics, ECHO. And this is a stock that fell down prior to the distribution in the broader markets. And the reason I'm pointing this out to you is to highlight the fact that if you have a stock has broken below its 50-day simple moving average, this is going to be in line with the broader markets. That in fact is a very negative indication, particularly if you see that action occur on volume. It's telling you that institutions are departing, they're leaving the stock, and oftentimes, as such, these institutions are going to need more than a day or two to exit their position. So oftentimes, when a stock breaks that 50-day on big volume, there is more downside ahead. So the point here is when you are examining your portfolio, if you have stocks that have just recently broken their 50-day or are poised, once they do break that 50-day simple moving average on big volume, you will want to pay attention because what we're viewing here is in fact quite common. I've also overlaid the RSI and the MACD. You can see once this RSI turns negative below this net neutral, that is in conjunction with this break below that 50-day. And then down below we have the MACD, which is also having a negative signal crossover, the black line down through the red. So this is also in conjunction with that pickup in volume with the selling. So this is going to tell you that the stock does have more downside ahead of it. Now, if you were, for instance, have stocks that you own now, they've broken below and you've sat and you're still pondering whether they will in fact recover, we do have secondary indicators that will also tell you and nudge you to get out of that stock. And in this case, this is a simple 10-day simple moving average. As it breaks down below that 50, shorter term crossing below a longer term. That's a negative death cross. So that's going to be your secondary indication if you had stayed in the stock. And then for those of you that are still contemplating and you are in fact hoping that your stock will recover, this is going to be your third and I would argue final blow when the stock breaks below that 200-day simple moving average. And we do also see that break occurring on above average volume. Your MACD is now below zero, so that's below that net neutral. It is negative. Your RSI is continuing to trend in a negative fashion. And then one other occurrence that is quite negative, again, for those of you who may have held onto your stock beyond any given break, once you see that 50-day simple moving average start to deteriorate or decline, for sure you do want to exit that stock, because when this 50-day simple moving average begins to decline, any rally attempts are going to be met with resistance at this downward trending 50-day simple moving average. And then we can also take a peek at a weekly view of this very same ECHO. We also are seeing, for those of you that use weekly charts, that same break below. This is a 10-week or a 50-day simple moving average, a break below that on big volume. Your MACD trends negatively, so you're getting these very same signals also on your weekly chart. So let's go ahead, and what I'd like to do now is go ahead and introduce Sarah Potter so that we can review ways that you can use options in this volatile period in the broader markets. As mentioned, she does have her own site where she educates individuals on how to trade options. She's also written a book, and she's also done a TED Talks about investing your capital in the broader markets. So without further ado, here is Sarah Potter.
Thanks, Mary Ellen. It's really great to be here. I'm so glad to meet many of you and to have an opportunity to share with you a lot of ways to be able to begin to hedge some of the risk. Certainly after the market big sell-off that we saw last week, for those of you who are more long-term investors, if you move over and start looking at some ways to hedge some of that risk using options trades, you'll find there's a lot of things to do when you have markets that are selling off. So for me, with a big sell-off as we saw last week, it was a really big week for me at shecantrade.com. Our live trading room, we saw a lot of big trades, two of them obviously in the broad market as things were selling off. So I am generally a more short-term trader, and I focus mostly on options. And while I do some long-term investing strategies, I primarily am looking to draw an income from the market every week, and I do that in options trading. And as we get to know each other a little bit more, you'll see a little bit more of the trades that I place. But I wanted to talk specifically to you about Apple. And Apple is one that was a large mover this week. It was an opportunity to place a trade. I have been in and out of Apple, and there's a lot of characteristics about the stock right now that look really good that I wanted to point out to you, so that if you are considering ways to be a little bit more active in the market, especially while we're seeing the volatility right now, options is a nice strategy to do. So I want to highlight for you some of the great things that's going on in Apple that make it a really nice stock to look at to trade options on. So first thing, obviously, everybody knows that Apple has been moving up for quite some time. So just like I'm sure many of you, I also, in my long-term stock portfolio, I have Apple. Now, while I have that sitting in a different account, I also trade Apple more actively. Here in Apple, some things that look particularly nice are what we've seen over the last 2 months. So Apple's actually been a little bit of a range bound in my opinion, which is an opportunity to be able to trade options really nicely. And so I take some short-term options on this. And what I do within Apple is I look for areas of support. And what you can see here is most recently, this is a daily chart, by the way, we're looking at here in Apple. You've got some nice support here around 220. And so I want to use that to my advantage, because we can see that there's been highs that we've reached twice here, price coming up through 230. And so now that we have price support at 220, we currently have the price of Apple trading above that at 222. I think there's a nice opportunity now to see Apple actually move a little bit higher. And so what I'm looking for now in an options trade is the ability to just place a small move, to look for things for Apple to move from about 222 up to 230 as the profit target. And so because I'm an options trader, unlike buying the stock, what I can do here is look to buy a call. And when you buy a call in an option, one call is basically you're looking at 100 shares of the stock. But when you do the option will expire. And that's kind of the difference, just in a nutshell, surface area of thinking about what options are versus stocks. You should still trade direction in options, or you can trade different ways. And you still use stocks as the underlying instrument that you're trading on. But with options, you're also making a trade based on evidence you're collecting about the moves that you think it's going to have, as well as when that move will happen, because options do expire. So for me, when I look at Apple, we know that over the last 2 months, we've had price move through that range of 230, sometimes hitting lows down to 215, but basically sitting between 220 and 230. So I want to trade that over and over again. And what I'm doing now with Apple is things like looking at calls, buying calls around where price is trading. So right now I'd pick up a 220 call and look for price to move up to about 230, giving it about a 2 to 3 week expiry to do that. Now, obviously, we are very aware of the market and how much it's sold off. So I think paying attention to implied volatility right now is also a very helpful factor. And so the trade that I actually placed this past week, and I've already been in it and I'm already out of it for profit, is a put credit spread. Now, for those of you who are new to options, that might be a little bit more advanced to kind of start out. But I just wanted to highlight that if you look at calls and puts right now, because we've had a market that's sold off so significantly, a lot of those calls and puts are costing a little bit more money. And that's because implied volatility is high right now. So for an options trader, what I can actually do is place trades where I think the stock price is not going to go. So just as we said, we identified that range where we were seeing an Apple. And so what I've been doing, and what I did this last week, is actually sell and place trades down here. So I actually traded a put credit spread down here by selling the 205 strike, buying back the 200, and basically hedging a trade and saying, you know what, I think Apple is not going to go as low as 205. Most likely we're going to see price stay above 220. And so all I did was pick up that trade. I picked that trade up on Wednesday, held it through until Thursday, and then I exited the trade for profit. And the trade was solely based on where I didn't think price was going. Now that's a little different and a nice thing about options versus stock. So let's get to some other stocks here that are looking good. Another nice trade is here in Microsoft. Now this one, again, just like many stocks this week, had a really big sell-off. And so for an options trader, same thing. I want to be able to take advantage of something that has moved into some support and looking like things can move back up again. So we know that Microsoft was on a nice steep trend, and it has been for some time now. You can see that on this beautiful daily chart of Microsoft, which makes it, one, a nice stock to own long term. But for some more short-term trading, I'm looking for this to actually get back up to its highs pretty quickly. Now, in terms of an entry point, what I want to see is price get above 112. And as we see the stock price move above 112, that's where I want to pick up a call. So what I'm going to do is use that level of support there that we're seeing on this chart at 110. I'm going to buy a 110 call and have the expectation that we're going to see Microsoft resume its highs. I'll probably exit the trade as we see Microsoft get up to about 114. So same thing with this 110 call that I'm looking at. I'll be buying that about 3 weeks. So I'm giving that 3 weeks to see price move up through 112 and hopefully back up into 114. Let's show you one more trade that I'm looking for. I think I'd be remiss not to talk about SPY right now. So this is the ETF for those of you who trade ETFs. And you can see, obviously, I did 2 puts this past week. So I traded this, just more of day trades as we were seeing the market sell off so much. So I was short in both of those days, got in and out of positions on the same day because we were seeing such significant sell off. And hey, if you're going to make that money that quickly, you might as well take that off within the same day. So we did that last week as well. Now, what you'll notice here, what's interesting about SPY and why I want to begin to trade it again next week, but this time calls with the assumption that SPY is going to resume its trend, is that we actually saw price have a really deep retracement. You can see that here coming back down into about 275. Now price bounced off that pretty quickly, meaning that within the same 2 days that we saw price below 274, it really didn't stay down there and it began to create a bottom. So as we move into the following week now, I want to make sure, one, that we are sitting above 274, and if we are, that's where I want to start picking up calls. So I'm going to buy some 275 calls. Now, when I trade SPY, I actually only trade SPY about a week to 2 weeks out. So I pick up a 275 call, watch price move up to about 280, get out of that trade, and keep doing that every week. It's been so great to talk to you today. I'm Sarah Potter, and I'm from shecantrade.com. We have a live options trading room. Would love to have you over there. Look forward to chatting with you again, and thanks again, Mary Ellen.
Of course, Sarah, that was wonderful. And of course, we will be having her back again, using options as a way to trade and protect yourself, not only against the volatility, but against potential losses in your stocks is, of course, a wonderful idea. So let's go ahead back. And I also wanted to get our arms around other ways that you can possibly play this volatility in the broader market. So let's go ahead back to stockcharts.com. I'm taking you here to the sector summary. This is accessible from that primary page interface, of course, on stockcharts.com. So we're looking at the sector summary. Actually, let's go back one more, and we can see that listed here are each of the sectors within the S&P 500. So what we can do from here, and this is with an eye toward uncovering stocks that you can potentially trade over a very short time period, maybe 1 or 2 days. This will make more sense as we dig in. So let's go ahead and dig into the technology sector. And I want to now key in on areas within technology that have been strong year to date. These are going to be your more active, more uplifted types of stocks. And it's going to take me to software. Software as a group year to date. Prior to the end or the beginning of October, there are names and areas within this group that were up over 41% year to date. So we're going to just go ahead and click on to that software. What it's going to do now is provide a list of stocks. This is as of Friday's close, and it's presented by percent change on that given day. But I want to get into those higher rated, technically more sound stocks that participated in that big year-to-date rally. So what I've done here is sorted it by the scooter. For those of you not familiar, this is a StockCharts.com technical indicator. Very, very powerful one because 99, the higher the better as far as its performance technically. So what we can do from here, of course, is just go ahead quite simply and drill down. You can overlay your cursor on top of the ticker symbol. It's going to provide you with a thumbnail snapshot. I want to key in on stocks that have had these big moves but are potentially reversing. And what that does for me is it's going to take me to TWLO. Hopefully you can see that little hook there on the bottom that it is potentially starting to turn. So what I've done from there is gone ahead and put up a 1 hour. This is a shorter term time frame, so we are going to use a shorter term chart, a 1 hour time chart, and then from there I've overlaid 2 simple moving averages, and that is the 8 and the 13. And what we want to key in on are these potential reversals in these formerly big winning stocks. So what we're looking at here is a stock, again, on a 1 hour basis. We can see since the end of September, this is October 1st until the 11th, in fact, the 12th. So that would take us into last Friday. We can see the downtrend very firmly in place. The stock is trading below these key simple moving averages. The RSI is below this net neutral in negative territory. And then your MACD is below this negative net neutral as well. But what we are looking to key in on is a potential reversal of this downtrend. Now, bear in mind, the broader markets are still very distressed. If we do get any kind of reversal, it's not something that I would expect to last for a superior length of time. But for those of you that watch the markets very regularly, stay on top of your trades, this could be a potential reversal of this stock as it has now jumped up above these simple moving averages on volume. Your RSI is now positive, and then your MACD is poised to turn positive. Now that exercise that I did, you can certainly do it for any number of other areas within that sector summary. We can, of course, key into other areas. Let's go ahead and go back, and we can take a quick look at the communication services sector. This is certainly a newer area, but we can then go ahead and look at the internet, which is a newly populated area of this communication services sector. And then the same exercise, we can sort it by scooter, and then go ahead and use that thumbnail, and we want to scroll down for those previously big winning stocks that could potentially be turning. And I see a couple of candidates here. Certainly IAC could be an interesting name. Of course, the daily is what will be presented initially, but what you can do is go ahead and look at that 1 hour chart. So that was one exercise. This one has not, let's go ahead and change the simple moving averages. In fact, I have a better idea. We already have the 1 hour here. So I'll go ahead and put IAC populated in there. And we can see, yes, it has very similarly potentially reversed for a near-term trade. It's gone up above these simple moving averages, MACD poised to turn positive, although it's had that positive crossover signal, and then your RSI is positive. So I will have to go ahead and leave it at that. For those of you interested in seeing more of my work, please visit my website, meminvestmentresearch.com,